All right, let's stay on the markets here and talk a bit about the outlook for that first quarter earnings season, which begins just in a couple of weeks. Saira Malik joins us now. She's the CIO of Global Equities over at Nuveen. So, Saira, let's talk about what you guys are thinking about as we head into that first quarter earnings period, and where expectations are at, and how crucial you think it is for companies to meet what have been, rapidly increasing forecasts ahead of this reporting period.
Our view coming into 2021 was that earnings will drive markets higher and valuations will take a back seat and actually be flat to down for the year. But the good news is actually starting to get priced in here, and we think it's going to become more challenging for investors and trickier. Q1 earnings season is a great example. What we've seen in the past where analysts lowering numbers going into the quarter end and then companies beating estimates. This quarter, we didn't see this. Analysts did not lower their numbers. We do still think earnings can beat by about 10%, but it's not going to be as easy for companies. While some companies that put up poor numbers may get a pass because we know we're still in a rough patch, companies putting up good numbers are going to get questions about their outlook and whether they're pulling some of the outlook forward, and that's showing up in their numbers. So we're very focused on sectors. We think you have to look for the right sectors like consumer, leverage to the reopening, infrastructure, stocks leveraged to the spending plan, and also certain stocks within those sectors that can do well and continue to beat earnings. Definitely a trickier period for investors going forward.
Yeah, and on that front, Saira, it's interesting because even when you're talking about sectors, you're not sort of giving your blanket approval to all of the stocks in the sectors. And we've been hearing more and more this year that stock selection is going to become more important, that it's become almost conventional wisdom. But you think, in some cases, you think it's going to be true. You have to pick your places carefully here. Within growth, it's interesting to me that you're still looking for opportunities in growth, and Salesforce is one of the areas that you're looking there. Why still look at growth, and why look at Salesforce in particular?
We had come in late last year more bullish on cyclicals and small caps. They've had a nice run for about 6+ months now. Growth, it came at the expense of growth stocks. So again, looking at valuations, growth stocks, if you can find quality growth companies like Salesforce, they did well during the pandemic. They invested during the pandemic. But the shift to the cloud and digital, that's a structural trend that will only get stronger post the pandemic. The percent of spending on IT budgets is going to significantly increase over the years. Salesforce is very well positioned, and the stock is well off its highs. So we see attractive, favorable valuation there for a company that has very strong structural growth going forward. And if we can find growth stocks like that on sale, we're interested in them.
Saira, to the individual investor at home watching this, should they start rotating out of stocks and sectors that are at risk for a tax hike?
I don't think taxes are going to be front end loaded. If you think about the spending bill, we actually view the spending as more front end loaded, probably riskier to short term inflation. Taxes probably don't kick in until the end of 2022. So that's not on our radar now. It is something to start doing your homework on, but the positive long term benefits from spending in certain areas like industrials. We like a company named Terex. They make aerial workstations, very heavily leveraged to a rebound in demand. And you have to focus on these companies that manage their cost structures and balance sheets well throughout the pandemic. Terex is well positioned, no debt due till 2024, managed costs well, so a lot of leverage there as we come back to normal, and also the infrastructure spending bill kicks in.
And I guess on that point, Saira, there's a specific name that you like there for a specific reason within a sector that would seem to be a broad sector winner if the infrastructure bill gets through. How do you think about that? It's been infrastructure week for the last couple of years. I think everyone would have a reason to doubt that spending actually comes through. Again, you're outlining a name that has a clean balance sheet and has other factors going for it. How do you think about something like a couple $1 trillion of fiscal spending on what has been for decades now kind of pie in the sky stuff?
Well, there's risks around the infrastructure bill. First of all, we don't know what form it will be in by the time it gets through the legislative process. Also, we do have to worry about the amount of taxes that are going to be raised in order to pay for that bill and how much that's going to hurt earnings. So we're always looking, even within large sectors, those companies that have their own levers to pull. So a company like Terex, even without the infrastructure bill, It's very heavily leveraged to an increase in demand as the world comes back to normal. The aerial work platforms, they're a dominant player in this space globally. That we think we can do well either way. Also, the way we talked about Salesforce, it's not just about looking at growth stocks because they're off their highs. Who are the dominant companies with strong structural growth tailwinds that can do well post the pandemic? These are the dominant players such as Salesforce. That's what we're always looking for when we're looking within these sectors at companies. Higher inflation, higher interest rates, all of that usually are positive for stock pickers. So our view is also that over time, picking stocks becomes much more important and crucial to generating returns, especially when we see valuations of the market where they are.
All right, Saira Malik, CIO of Global Equities over at Nuveen. Saira, great to talk with you this morning. Thanks so much for jumping on. I know we'll talk soon.